Thanks for tuning in, everyone. We want to give you a quick overview of the top commercial issues for the 30 June 2020 financial reporting cycle. I'm joined by Renee Muller, Tom Malarkey and Rory Gordon, and we're here to chat about the current economic environment impacting the real estate investment sector. Renee, can you give me an overview, please, of what you think are the key issues for this year's financial reporting cycle and maybe what's different?
Sure, Ronnie. Well, different is certainly a good word to describe the FY20 reporting cycle. With COVID-19 having significantly impacted the economy, we're expecting a lot more complexity around financial reporting for FY20. Some industry sectors have been impacted more than others, and the real estate investment sector is a prime example of an industry that's been more impacted than others. For these sectors heavily impacted, we'll expect some complexities around matters such as estimates and judgments, where there's uncertain outcomes, or in particular when looking into the future when things are so uncertain. So Tom, what are some of the hot topics at the moment amongst real estate investors?
Thanks, Renee. For me, the number one issue at the moment is rent relief negotiations. Presently, landlords and tenants, they're negotiating the rental reduction amount based on forecasts, and it's very difficult to determine how accurate those forecasts are in the current environment. There's limited information available to landlords to assist with the determination. So at the moment, very difficult for landlords to know with any degree of certainty whether the amount they have negotiated is fair and reasonable. And while these negotiations are going on, taking up a lot of management time and attention, they'll need to switch their focus to the financial reporting requirements, which are quite onerous themselves as well. So this is a big topic for the sector at the moment.
Thanks for sharing your thoughts, Renee and Tom. One of my observations very early in talking with many people in the sector is many of the experience economic declines, and many would say that they're well prepped for some of the financial reporting considerations for this cycle. I would strongly caution that view because since the GFC, which was 12 years ago, there are a number of new accounting standards that have come out which weren't around then. They will impact things like fair value, they'll impact things like disclosure. So please keep that in mind. We at ChimeWing put together what we think are the top 10 commercial issues for the real estate investment sector that needed to be, I guess, front of mind for this 30 June 2020 reporting cycle. Roy, did you want to maybe give some comment on what are the one or two areas that you're talking most to with your clients that's certainly taking up a lot of their time in readying for the reporting cycle?
Thanks, Ronnie. The other big issue we're seeing in practice is asset valuations. I think the main difference since the GFC is the introduction of IFRS 13 and the uncertainties that we're seeing with respect to future cash flows, particularly as a result of these ongoing lease negotiations, and obviously the impact on the DCF valuations. Management will definitely need to closely consider any valuations that they're adopting this cycle.
Great, thanks, Rory. Keep an eye out. We're going to release a few more videos throughout the month of June. We're going to at least do a couple of videos on valuations and rent relief, the two issues that Tom and Rory mentioned today. If you can't wait for that, you can jump on our website and download the top 10 commercial considerations for the real estate investment sector, or equally reach out to any of us on today's update. Stay well and have a very good reporting cycle.